Hi, this is Ed Gudeman of Gudeman Associates Financial Law Group. Today I'd like to talk to you a little bit about mortgage modifications. Mortgage modifications are a means of reducing your liability or your payments on a mortgage. Over the past several years, many people have applied for mortgage modifications, but statistically, very few actually get them. And one of the reasons that people don't get a modified mortgage is that they just don't have what I call intestinal fortitude to get through the process. The mortgage companies, I think, really don't want to give anybody a mortgage modification, and they make it very difficult to obtain one. If you've been through the process, you know they continue to ask for the same documents over and over again. They'll have you fax them in, and a couple months later they'll say, well, what you faxed in is now dated, we need the next 3 months faxed in, so fax those in. And you continue to do that. My suggestion to you is stay the course, because if you're otherwise worthy of a modification in their eyes, they'll give it to you. But if not, you're not going to get it no matter what you do. Now, many people who apply for a mortgage modification are attempting to save their homes, and that's a good goal, obviously, and we support that. The means of getting a mortgage modification are to have a mortgage in taxes and insurance. In other words, the cost of staying in your home that are in excess of 31% of your gross income. That's kind of a general litmus test type of standard. If your expenses are higher than that amount, you might consider getting a mortgage modification, but it doesn't guarantee that you're going to get one. There's a lot of factors. Some of those are the type of income you have. If you're on disability or Social Security or workers' comp, the likelihood of your getting a mortgage modification is not very great. Most mortgage companies want you to have earned income, be out there working, and have a steady stream of income that they can rely on for you to have to make new mortgage payments. And if you don't have them, it's not likely they'll give you a mortgage modification. Now, many people apply for a mortgage modification thinking it's going to stop a foreclosure. There's no guarantee that that's going to happen. And we've had clients come through our office many times who have been in a mortgage modification and they get a notice posted to their door that their mortgage company is foreclosing them. And you might be getting letters even from our firm or many others that your house is in foreclosure. That's usually due to the fact that we've picked up a notice from the legal news that your house has been subjected to foreclosure, and in 30 days from the date of that posting, or the time that they put it into the Detroit Legal News or other credible publication, there's going to be a sheriff's sale and your house will be sold. Now, in Michigan, typically you have 6 months after that sale date to redeem your house. But sometimes people can't afford to do that, and being in a foreclosure doesn't help your credit or your ability to get a new mortgage. So, mortgage modifications are not a guarantee that you will not be foreclosed. One thing that we can state with pretty much matter-of-factly is that if you are subject to foreclosure, be it for a mortgage or for taxes or condo association fees, we can stop the foreclosure and make arrangements for you to pay those out for over as many as 60 months, from 36 to 60 months without interest except for taxes. So give us a call at Gudeman Associates Financial Law Group at 248-546-2800 or 586-693-2000, and we'll be able to help you out.